let's talk about that palpable sense of optimism versus pessimism. People that change their minds about what to expect based on day-to-day market moves, like it's very common. I do that too. The last quote I see on the Dow, up 500 or down 500, I may say to myself, oh, maybe it's not so bad. And then a day like today, you look at it and you just feel, oh, this is going to go on for longer than people think. It's really hard to control that emotion. Everyone is susceptible to it to some extent. Where I've been the last couple of weeks, all of the trades I've talked about in individual stocks have been sales. Not because I expect worse calamity. I just think it's going to be really hard. And I'm starting to come around to this L-shaped idea. And I hate that I am, Scott. But I continue to look at the banks, the credit card companies, mortgages. None of these things are going to get better, even if you start opening up the economy a week from now, 3 weeks from now. So I'm not in this camp that says we're going to zoom right back to new highs. And look what they're doing to the winners today. They came for big cap tech today. You knew it was a matter of time. So that is just indicative of us being stuck in place. I think it's okay, but people shouldn't get overly excited in one direction or the other based on what they see on their screen.
Yeah, it's interesting points that you make. And I'll go back to Rob Sechan, who I believe can hear me now. And, Rob, the point we were making right off the top are the comments that you made just before, a few days before we hit the lows, in fact, that pessimism was palpable, that there was a panic mode. Those were the words that you used. Josh just now is talking L-shape recovery. Does that mesh with how you're seeing the markets today? You're a top 100 financial advisor. People are looking to people like you today and in these days for advice. So what do you tell them today?
I mean, back then, I just think emotion got way too negative, and we stepped in and started telling clients that now was the time to do some things, rebalancing being one, repositioning into quality being another, but maintaining and increasing exposure. I think we've gotten to a point where markets are discounting an awful lot of good news without verification. And it's been more on hope than on fundamentals. And economic data and profit data, while they're not relevant in the short run, I think that, investors are starting to look beyond. And in looking beyond, I think we need to see and verify the effectiveness of policy, the impact of the lockdown, which is probably the most significant thing, the progression in the diagnostics, therapeutics, and vaccine. And news has been incrementally positive. But as much progress as we made, I think markets are ahead of themselves. So, we are still taking kind of at this point in time, a paused approach to see if we can get some verification of that good news. That said, it's tough to bet against this market. There could be a pharmacological breakthrough. There could be an extreme, more extreme policy. Certainly policymakers have been engaged, and we have seen the benefits of that. So I think we need to pivot from this phase of desperation to hope, but also to being realistic about what's likely to happen. And I would say we're cautiously optimistic, not negative, but certainly positioning clients in a way that we can participate in some of that upside without exposing ourselves so much to the downside.